The easiest ways to make money in this bear market rally that actually work. Not TLT. It's too hard. Let's be honest, bulls have had their moments this year. Their best comeback line is recession has priced in. The market is so efficient now. It somehow even has the 2030 alien invasion priced in. We are rallying into a crash. Well, 420, the day that the party is over. Tesla just crashed 10% after their Q1 earnings disappointed Wall Street. For their aggressive price cuts eroded their profit margins. Now you can get a Tesla Model 3 cheaper than a Honda Accord or a Toyota Camry. These cars are like appliances nowadays. What would you buy? This is the most manipulated market we have ever seen. All the bad news will begin flooding the media soon and increase in intensity next week. Looks like OPEC's production cuts have backfired. Oil extends losses as a stalling U.S. economy overshadowed crude demand. What is the easiest way to make money in this bear market rally that actually works? I will explain it all right after this. Welcome back everyone to the Audacious Money Witch channel where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push the like button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you're a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real. You want it to be true. You want to be my client, don't you? And here's my client's collaboration book. It's already yours, Adversity Equals Success. Such an amazing book with such incredible authors. Order your copy today. And my client Eazzy's book, Wicked Pussy Perfume. It is a femdom novel and it's about money, stockings, and the stock market. Such an amazing author with such incredible content. Order your copy today. It's a shout out for my client Eazzy. The VIX has reached its lowest level since the beginning of 2022. Implied volatility is not likely to stay this low for long. The VIX term structure has significantly steepened recently, with the spot VIX falling to 17. The market's most significant challenge after Friday will be the uncertainty surrounding the next Fed meeting on May 3rd. Although the market predicts a 90% chance of the Fed raising rates by 25 basis points at that meeting, what follows is highly uncertain. Currently, the odds are increasing for a June rate hike and a May hike, but the probability of the two rate hikes remains low. The May press conference and FOMC statement are likely to be ambiguous and offer little reassurance to the market about what will happen next and will work to increase implied volatility. Cleveland Fed President Loretta Mester concluded on interest rates. Inflation still remains too high. Given that some of the increases in rates and tightening in financial conditions have yet to be felt in the economy, we need to be prudent in assessing all of the incoming economic and financial information when determining the appropriate path of monetary policy going forward. We are much closer to the end of the tightening journey than the beginning, and how much further tightening is needed will depend on economic and financial developments and progress on our monetary policy goals. That said, Price stability is critical for the long-run health of the labor market, the overall economy, and the stability of the financial system. So it would be a mistake to declare victory before the job is done. Here I am reminded of the words of former Fed Chair Paul Volcker when he fought inflation in the 1980s. Failure to carry through now in the fight on inflation will only make any subsequent effort more difficult, at much greater risk to the economy. Another market headwind is the liquidity drain as the Treasury general account rises and reverse repo facility usage increases. These liabilities are on the Fed's balance sheet and remove excess liquidity from the market. The TGA had been depleted to around $100 billion. But with the influx of tax receipts, it has risen to about $250 billion and is expected to continue growing in the coming days. The recent surge in money market accounts appears to flow into the reverse repo facility, with usage approaching $2.3 trillion daily. As we approach month end, use typically increases as government-sponsored entities park some of the cash they have collected throughout the month in the facility. The rise in the TGA and the reverse repo facility should result in falling reserves. Additionally, the decline in discount window usage and the return of loans from foreign officials to the Fed, in conjunction with quantitative tightening, should reduce the size of the balance sheet. Based on my reserve balance modeling, current reserves are estimated to be around $3.2 trillion. Still, this number is likely to decrease in the coming days. It may fall below $3 trillion over the next few weeks, effectively removing all the liquidity that entered the market following the Silicon Valley Bank rescue. Historically, reserve balances of $3 trillion are equivalent to an S&P 500 trading range of 3,800 to 3,900. The apparent strength in the stock market should not be mistaken for actual strength. It's related to options hedging, which may disappear once options expiration passes. Then the market will likely shift its attention to the May FOMC meeting, resulting in higher implied volatility while liquidity is drained. Buckle up! The easiest way to make money in this bear market rally that actually works is to buy US 3-month T-bills. If you don't have access to Treasury Direct, you can buy iShare ETF, SGov, or you can buy a classic Ferrari. In 1977, a Ferrari owner offloaded his 1962's 250 GTO because his wife complained it was too noisy. I won't complain it's too noisy. I love Ferraris and I love the sound. It was either her or the car. Can you believe that? It was either her or the car? Nowadays, I'm not sure the wife would have won out. Times have indeed changed. In 2008, the same Ferrari model became the most expensive car ever sold, when it fetched $48 million at auction. Last year, that record was flattened by a 1955 Mercedes-Benz 300 SLR Uhlenhaut coupe that raced to 135 million euros. These kind of mega deals are at the vanguard of billions of dollars of annual spending on classic cars globally, in a wave of investment in this alternative asset. Vintage cars have risen 185% in value over the past decade, outstripping the growth of luxury rivals wine, watches, and art, and ranking second only to rare whiskeys. According to Knight Frank's 2023 Wealth Report, the market has expanded beyond a comparatively small community of collectors to include investors drawn by the prospect of high returns plus a lack of correlation with mainstream portfolio assets such as stocks and bonds. The track record of the past 30 years tells us classic cars have become a financial asset class we want our clients to have in their portfolios. This year, the asset manager is launching what it describes as the world's first evergreen fund to invest in vintage vehicles, and says it'll only bet on cars worth more than 1 million euros each. It's also not a sector for the financially faint-hearted. Registered in Luxembourg, both the Azimut and Hedeka funds have a minimum entry investment bar of 125,000 euros. We get loads of calls from people who are looking to invest 1,000 to 2,000 euros, and we have to turn them down. Moreover, a small scratch or dent or a replacement part can deal a heavy financial blow. For example, replacing just the bumper of a rare vintage car can cost $15,000. Running costs for car collections include hefty storage and insurance fees, could easily amount annually to 5 to 6% of the portfolio's value. According to the Florian Zimmerman, who started buying vintage cars when he worked at Mercedes-Benz, and has since built a collection of 300 vehicles with a partner, it's getting harder and harder to find the proper mechanics to keep these cars alive. And you have to spend quite an amount of money to keep all these cars in running condition. Indeed, investment funds managing car portfolios can be a money spinner for the classic car divisions of automakers, which not only provide repairs and parts, but also certify the authenticity of vehicles to take part in shows and competitions. Nonetheless, the classic car market is expanding as the number of wealthy people also rises. The value of vintage cars grew 25% in 2022, their strongest performance in 9 years, versus stock and bond market's 30% drawdown. While North America remains the largest market for auctions, with Haggerty recording $3.4 billion in auction sales in 2022 versus $774 million in 2007. The race to renounce combustion engine cars will only serve to heighten interest in these relics of a vanishing era. Electrification will favor classic cars. Over time, they will become cult objects. You are such a good boy for watching my video right till the end. Bye.